Welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California, where it is bright and it is sunny. It's going to be a beautiful day. And what I wanted to do today on Monday, by the way, happy Monday. Just want to recap what we talked about last week in regards to Bitcoin's price action, the Nasdaq, the war, inflation, the dollar, gold. We even touch on oil. And two of my favorite altcoins, Atom and Luna, and also talk about the wage price inflation, wage spiral, basically where wages are increasing faster than inflation, really bad for the economy. Anyways, so what do we look at last week? First of all, on the weekly time frame, we were looking for what's called hidden bullish divergence, where we were looking for any kind of a closure above last week's high of 40,300. We looked like we were going to close above there, and then, Putin attacks a nuclear power plant in Ukraine, and the whole market takes a big dump. And what would that be? What is hidden bullish divergence? That's when price is making higher lows and RSI is making lower lows, and we were looking for at least a shot to the top side of the range at, somewhere around, probably around 52,000. However, that was not confirmed. And we did have a bit of some would call that a falling star candle or a shooting star or a hammer. But that is a reversal type candle. And however, there wasn't too much volume on it. So given that we see here volatility is declining, that upside move was mostly a corrective move, and so that is not confirmed. We did not get a weekly closure above last week's high. Bulls are averted again, but let's throw it down on a lower term time frame for the daily here, and I am just going to throw back on my moving averages because it looks too naked for me. And what am I saying here? This looks like a bit of a corrective move as well. And I could see any kind of a tick above last week's high. We get a move to the 9 exponential, even all the way up to the 21, kind of our breakdown region. We said last week, if we did get a daily closure below 40,200, that would very, very likely give us a move back to the bottom side of the range at 37,000. And if that does not hold, I'd expect these wicks to get tested again over some time, not today or tomorrow. And do I think the market is over? No, that's why I say it's very, very important to wait for confirmation. And on the daily time frame, we did say, let's wait until we get a daily closure above 46,000. And that would confirm the next major move to the upside, which is, I'll just throw on the fib real quick here. Going to have a target around 52,000, call it right into these highs right here. And then we would be looking for more bearish divergence if we cannot take out these highs on that move. However, let's flip this around for a bearish retracement. And again, any kind of a daily closure back below, call it 32.8, likely gives us a move down to that $25,000 mark. And that is on the monthly time frame. Let's put it on BLX and see what it looks like on the monthly. Yeah. So that 25,000, that's right in line with the green 55. I don't think we close any monthlies below there, pending Russia doesn't launch a nuclear bomb. And even if Russia does launch a nuclear bomb, I think people got to realize, it's not the end of the world. It's a horrible thing. Nobody wants that to happen, but life goes on. And Bitcoin is the most anti-fragile asset. It is still the best solution for our monetary problem, and the way it looks like it right now, the Great Reset is they're going to make inflation go crazy. Everything's going to get so expensive. Nobody can afford anything. And then they're going to introduce, universal basic income, which they already have basically with all the free handouts they're giving. So I don't want to get too much into that, but back into Bitcoin's price action. Here on the 4-hour, and again, I said this is a corrective move, so I would expect, Bitcoin probably to test around 39 to 40,000, and then play out some more downside, and see if we can put in another higher low. If we can clear back above, I'd say 40,500 on a 4-hour, preferably a 12-hour. I would look for us to get a shot back to the, range highs somewhere around the purple 200. Let me throw it on an hourly. And so again, just recapping on the daily here, why do I think this is a corrective move? You want to see when volatility is decreasing and the price is going in the opposite direction of the trend. In this case, you have momentum down, right? And that's a corrective move. So a corrective bounce, those bounces typically get you up to the yellow 21, which is coming in right around 40,200, our last breakdown area. Another reason I think this is more of a corrective bounce, you got Nasdaq, which is playing out some downside right now, alongside S&P and the Dow, all down today. In the red again. And oh yeah, what did I want to point out on the Nasdaq for all you Nasdaq people out there, people in the stock market? You got the death cross on the daily right there. What do we got on the weekly here? That was a candle of indecision, showing just a tick below. This guy probably going to oh, we already got the tick below. These wicks like to get filled in, and I wouldn't be surprised if we do test down there. Maybe not today or tomorrow, but over the next week or two. What else do we have here lining up on the board here? And especially, got to watch out for March 10th. That's when the inflation numbers are going to be announced. And I don't know if you've seen the gas pump here, but in California, gas is over $5 a gallon. That's crazy and absolutely insane. So what did I want to point out on the Nasdaq? Something pretty awful here. On our secondary chart, I've got the MACD crossing to the downside, similarly to Bitcoin. But that is a very, very not so good cross. The last time we had that cross, November 2018, what happened? Nasdaq went from 7,000 down to 5,600, but that was crossing from kind of a low region. This one, we crossed down. Nasdaq played out. Let's see. Got to take off these other indicators here so I can get a clearer picture. Don't freeze on my, no, don't, trading view. Okay, come back. Boom. So NASDAQ, during this cross, down here, July 2015. Where's July 2015? Right here. So that may not look like a big move, but in the stock market world, we're talking about, a move that ended up going down 17%. So we just got the cross down. And then this one right here, as we all remember, 2008, right? 2008, we got the cross. But look how high of a level. This is coming up from such a high level. I wouldn't expect, I would expect a bit of follow through on that over the next month or two. So no wonder people are rushing to bonds right now and fleeing, as you still got some retailers doing the whole buy the dip thing. And you were seeing, I think, I don't know how much retail investment there was, but there was quite a bit versus institutionals and family offices just literally pulling the plug here. And I think one of the reasons is, when you have wage price spiral inflation, where, wages are going up faster than, inflation, it's just, so wage price spiral occurs when consumer prices rise and wages follow because workers press their employees for pay raises to keep up. Employers respond by raising consumer prices even more to match their rising costs. What's an example? When workers receive a wage hike, they demand more goods and services, and this in turn causes prices to rise. So yeah, basically we don't want to see wages rise faster than inflation, which the Fed readjusted their numbers, and I expect inflation is going to be higher than wages coming out here due to the oil crisis in Russia. And here's the other thing that seems to be on the board. You know, even though we had a positive jobs report last week, when Russia attacked a nuclear power plant, okay, they showed they don't care about ending this war, and more sanctions came, and Russia's saying we're not going to send you any oil, right? In response to those sanctions, we buy 7% of our oil from Russia. And then you had the Saudis say, hey, look, we're not going to increase oil production for you, Biden. Go kiss rocks, right? And then on top of that, you know, when you saw these countries kind of weigh in on the Ukraine situation, China, India, and the UAE, the United Arab Emirates, all basically sided with Russia or didn't condemn Russia for doing what they're doing. And that's a real easy way for Russia to say, oh, you're going to block us? We'll just deal with China, India, and Russia. And by the way, if you don't know this, China, India, and Russia make up, most of the population in the world. So that is not looking good. Biden's not looking good. And that's a bit concerning about the war and inflation. Okay. And what else is happening right here? The dollar is skyrocketing to the moon. As we did say, we had a target on the dollar here, sitting here at 103. It's breaking out right now on the weekly time frame. I'm going to throw back my primary chart here. Excuse me. And increasing volatility. Stokes are in the critical zone. We're just entering the bullish control zone. The dollar looks strong. Now, what's odd about that? When the dollar goes up, typically stocks go down, Bitcoin goes down. Okay, not always, but that's just typical. And typically gold goes down. And what did we say last week on gold? We did say any kind of a weekly closure above that pivot there, which I don't know if we got it. Let's see, did we get it? Sometimes the old saying is close enough is close enough. But we said any kind of a weekly closure above 1917. So we did not quite close above, and gold would be heading upwards and onwards. And here we got gold. It hit 2,000 an ounce this morning, I believe. Congratulations, Mr. Gold. You are finally doing what you're supposed to do. And that's go up, not always go down sideways for 10 years. But here's what's going on. I mean, again, I am waiting for confirmation on that. This gold little spike here could easily be a hammer candle. And did we get the closure above on the weekly? Let's see. Let's really dial it in here so we can see. And we did. Well, did we get it? Yeah. The weekly closed above 1917. Why did I not see it at first? Well, let's put in a horizontal right here. And yes, we did. We got the weekly confirmation. Gold, I would expect to at least revisit the highs over the next week or two, maybe a month. Gold moves like a snail in molasses, and any kind of a pullback down here around 1920, 1900 is completely fine. However, yeah, so congratulations, Mr. Gold. What else do I want to bring up here? So we covered Bitcoin. Oh, yeah. So Adam and Luna. What's going on with Luna here? Playing out a bit of a relief rally here. So after we got the... So here's what I'm looking for on Luna right now. We've got volatility declining. Stokes are up, so that's a corrective move. And where do these moves typically get sold out? The 0.5 to the 618. That would be the bull trap area. But if you just want to go based off of this last daily candle, you can see here, we're right at the 0.5 and the 618. That's where you'd expect to kind of retrace, in my opinion. So, not financial advice. I'm not a financial advisor, but if you're in Luna and you're watching the markets right now, you may consider taking a little profit. All right, another one here. I could be completely wrong. And how would I invalidate that? Any kind of a daily closure back above 85.77. And I would say this is just a little bit of a fake out. And but typically you get that first closure below the 9, you're going to get a move down to the 21. And I imagine this thing is going to do kind of whatever Bitcoin does. Okay, let's take a look at Atom here, doing something similar here on the daily. And what I will do is take it from this last daily candle and throw on the Fibonacci retracement. And I'm going to go down to the wick here because we are in a more volatile market. And you can see we are coming right up to the 618, right up to the yellow 21. This is your traditional bull trap area. And I would imagine if Bitcoin can't pull itself up by its bootstraps and start closing back above 40,300, then Atom probably takes a leg back down and fills in this wick over time. Alongside Nasdaq. Nasdaq is just, and S&P, okay, getting a little bit of recovery, getting a little bit of a bounce. Let's see it on the 4-hour. What do we got here? Volatility is starting to lose its curvature there, and Stokes are coming up, are going to cross up, and we are still staying in the bearish control zone. So, you know, I wouldn't be surprised. Again, my new phrase here is going to be sell the breakout and buy the support. So what does that mean? That means exactly this, right? This was the breakdown level right here. We broke down below it. So you sell the breakout and you buy the support. Simple support and resistance levels there. So that's your resistance. There's your support. So basically what that would look like, well, if we break above here, you sell and then you buy the support. You have your risk management. Again, it's not financial advice, not a financial advisor, but something I'm implementing into my strategies here. What else did I want to talk about? That's it, guys. Thank you guys so much for watching. Remember, March 10th, keep an eye on that date. Those inflation numbers, the last time we had inflation numbers come out bad, what did the stock market do? It crashed, okay, alongside Bitcoin. And I hope you guys all enjoyed our daily analysis. Click subscribe in the link below and get reminded of all the future daily videos we put out, all the resources we drop. Also, if you're interested in learning about crypto or incorporating Bitcoin into your IRA, there is a link in the description below. Thank you so much and have a blessed day. Take care.